Home prices are dropping. We're seeing it in the headlines. Now, that might be great news if you know how to play it. As an owner of 60 doors myself, I'm not going to sit here and cheer on home values dropping, but I do want to double click on the facts versus the headlines, because when you see the headlines that came out from Redfin talking about 11 of the 50 metros have all seen a price decline, I want to talk about what that data really means, what buyers are seeing and experiencing in this market, and what a shifting market actually opens up for opportunities. Honestly, this is not a hype video. This is not a you should be buying right now. I just don't want the headlines about home prices to be the reason that you shut the door. Ultimately, I just want to cover the facts. I want to talk about strategy, and I want to bring clarity, especially in the uncertain market that we're all living in right now. Let's talk about this Redfin report, because ultimately what it's discussing is the median home prices of homes that have closed compared week over week, month over month, and year over year. Redfin is saying that 11 of the 50 metros now are down or negative year over year comparisons. And they're saying, though, nationwide, we're seeing an uptick of 2.1%. Still up, but it's slowing. Now, I want to counter compare this to home price index, HPI. That's a data set that you're going to find from larger data aggregators like FHFA, which embodies Fannie Mae and Freddie Mac's databases, and Case-Shiller. So Case-Shiller is one of the biggest databases of housing information out there. And based on what they're seeing, the United States is slowing down in its appreciation, not even at 2.1%, but 3.9% year over year. That is slowing. We saw some massive appreciation during the pandemic years, and we've had a bumpy, relatively flat road since June of 2022, which I want to talk about. In all of this, it's a little bit of a different story than, say, Redfin story. And Redfin story, when you're talking about the median home prices, it's highlighting a lot of the states and metros that you would expect. In fact, number one was San Antonio, down 3.7%. Number 5 on the list was Austin, also down 1.3%. And then number 2 is Oakland. 3 was Jacksonville. So these are metros that year over year, the median home price is closing for less than it did last year. But when I'm looking at the home price index, I want to talk about the 2 peaks that we've most recently seen. And I want to compare this recent time to 2008, just for comparison, because there's a lot of conversations going right now that we're seeing the next housing bust. The prices are going to fall off the cliff. What goes up must come down. And I do get the fear and the uncertainty. It's not about timing the market. It's about time in the market. And that's the clarity that I want to bring today. So if I look at the home price index, the HPI, and if I look at it for the Denver metro, because that's where I'm at, or if I look at it nationwide, I see that we hit a peak in and around June of 2022. And then we dropped off, and then we hit another peak, a higher peak, in June of 2024, and we've since dropped off and flattened out since then. So if I look at that first drop off, we lost about 5%, and then we regained it. And then from June of 24, we've lost less than that, less than 1% or around 1%, depending on what metro you're looking at. Right now, the United States is 0.4 below the peak in June of 24. In Denver market, we're also 0.4% below our second peak, that June of 2024. This is compared to the worst housing crash in history, which absolutely devastated a lot of people's financials. And I get why we want to compare it to that. Never feel that again. But as a whole, the United States lost 26% of our home values per the HPI from 2006 down to 2012, and it took until 2016 to recover. Here in the Denver market, we lost about 8%, and we had recovered fully by 2012. This is a recalibration. We are becoming stagnant. Some metros, some neighborhoods, some homes are losing more value than that. 100%, and I don't dismiss that. I'm not even arguing that point. My point really, though, is are we seeing a housing bust or a crash, or are we seeing a correction off of the most massive amount of appreciation that we've ever seen, which we saw during the pandemic years? So right now, even in a softening market, I continue to hold on to the fact that home ownership wins long term. And why do I believe that so much? much? I believe that because I've seen the wealth gap. I know that long term, I can create homeowners who are in the top 10% of wealth just simply by owning 3 to 5 homes. I've seen that the average net worth of a homeowner is over $400,000, whereas the average net worth of a renter is stuck at $10,000. That is not a way to enter into retirement. Home ownership gives you options. It gives you an inflation hedge. You know that your principal and interest is not moving, whereas we saw a 3.5% increase in rents year over year. And I know everybody's talking about the fact that taxes and insurance is going up, but landlords aren't going to hold on to that. They're going to pass those increases on to their renters. So we're going to continue to see increases in rents as we see those. So as a homeowner, you're shielded from that because at least the principal and interest portion of your home is fixed. It's also forced savings. When you're renting, you're paying somebody else's net worth. You're paying down their mortgage, not your own. Plus, the amazing tax deduction, especially once you get into real estate as more of an investment. The tax deductions add up. I want to give you 5 ways to get strategic in a market just like this one. 1, plan for a longer time period. Are you moving into a house that you could see yourself in for the next 5 to 7 years? If it's a 1-year home, a 3-year home, it might not be the right time to buy. Also, focus on affordability. I talk about this all the time. Right now, we're actually seeing rates going down slightly. And then, of course, with slight declines in home prices, it might just be tipping in your favor for affordability. But what's the monthly payment that fits your budget? And what's the cash to close that doesn't leave you house poor? And then the third is negotiate like a pro. I'm seeing some massive wins in this market. In fact, I'm personally doing a 1031 exchange right now. I'm taking advantage of a softer market and I'm 1031 exchanging that money into a longer term, higher producing asset. I'm also seeing phenomenal buy downs. I just helped secure a win for an investor yesterday using 6% seller credit, which was crazy, but to buy the rate down permanently on a 30-year fixed to 5.875. We're seeing primary homes get permanently bought down into the low 5s. That's an opportunity that we have right now because we have sellers who are willing to negotiate. You also have the opportunity to have your closing costs paid for. We're seeing $10,000 in seller concessions towards closing costs. In fact, as a nation, we're seeing 44% of all homes have seller concessions. And here in the Denver market that I'm in, we're seeing 60% of our sellers offer seller concessions. This is a phenomenal opportunity, especially for first-time homebuyers or those homebuyers who are trying to execute on a strategic solution to negotiate a win. We might even see some more dips in home prices over the next year or two, but long-term, home prices always go up. Don't obsess about hitting the bottom. Buy below the curve. Buy it right now. We know we're slightly off from the peak nationwide and here locally. So buying now, you know you're already put in a position where you're going to have opportunities for appreciation. So this is the time that if it's the right time to talk to somebody about your strategy. If you're at all interested in whether or not now is the right time, or if not now, when, I'd love to talk to you. I absolutely have no intention on creating any kind of stress around now is the right time to buy. But I will tell you that my pipeline right now is full of buyers who are excited about the wins that they've been able to achieve, given the softness in the market and the opportunities to negotiate with sellers and to find that right home that they've been waiting for. Hit that subscribe button and share this video with somebody who you know just needs a little clarity. Nicole, Rueth, I look forward to catching you on the next one.